Thank you for joining us at XM.com for this Forex Preview video regarding U.S. retail sales out tomorrow. I'm Cristina Marujos, and joining me today is Cristina Bartenido, investment analyst. So, Cristina, it appears that U.S. manufacturers are in a recession already, according to the latest ISM survey. However, consumers are a bright spot in the economy. Do you believe the U.S. Retail sales report out tomorrow could confirm that?
Well, after July's stronger outcome, we expect a slowdown in U.S. monthly retail sales in August, and that might be somewhat discouraging at the first glance, especially if the retail control group, which is closely correlated with the GDP consumer spending component, falls from 1% to 0.3%. But if you look at the bigger picture, such a result has been very common and within a specific range over the past 5 years, and therefore we shouldn't worry about it if the data come as expected, or even strictly consider it as a negative impact of the trade war. We still have a tight labor market in the U.S. that is expected to keep supporting consumers and growth in the U.S. economy. However, the question that arises here is for how long will consumers remain resilient to global risks? And as you said before, the manufacturing sector is already in recession, and we have already some evidence that the pace of hiring in the industry has started to slow down. So unless the U.S. provides enough stimulus, we might see consumers giving up and GDP growth slowing even sharply in coming quarters.
And speaking of stimulus, it appears that the government relies completely on the Fed to come in and save the economy. Now, the president is demanding lower interest rates. Do you think the Fed will give in to these demands?
Well, it's easier to cut interest rates rather than pass fiscal stimulus measures through the Congress. But even if the U.S. president wouldn't ask for lower interest rates, the Fed would still reduce them to balance the economy and drive inflation towards the target. And that is what is expected to do next week at the FOMC policy meeting, and probably could act more aggressively later in the year if the trade war brings more serious damage to the U.S. economy.
And let's have a look at the dollar. Of course, the new arrangements for trade talks between the U.S. and China appear to have given a boost to the dollar, which has been performing better than safe havens. Now, do you think the data released tomorrow could support a further momentum in the dollar?
Well, unless we see an unfamiliar movement in the data, the dollar may not react much against safe haven currencies such as the Japanese yen or the Swiss franc. However, today's ECB policy meeting and Brexit headlines during the week may raise volatility in the market, and that may probably determine whether the dollar can attract more gains later in the week.
Cristina, thank you for joining me today, and thank you for watching us at XM.com.